Are you a rookie trader? Learn these 3 hacks for fast profits. Trading can be a tough game if you don't have a proper plan. Here are 3 hacks for smart rookies who want to start making money in financial markets right away. Welcome back, folks, to another edition of Sweetie Kiwi. I hope you are doing marvelous. I'm doing fantastic today. This is one of my favorite topics. We're going to talk about making money through trading, and I'm very happy. I want to quickly acknowledge Trip Molina in Red Star, Arkansas, Corey Hunter in Little Rock, Arkansas, and Peyton Hughes in Fayetteville, Arkansas. Thank you so much for your support. We want to thank and encourage our millions of viewers and listeners to support us through social media posts, to comment, to share, to like our content. We really appreciate it in advance. Thank you. Now, the 3 hacks are very simple. The first one, take care of yourself. What do I mean by that? When it comes to trading, if you are a rookie trader, if you are a beginner, the first thing you want to do is to safeguard your mental capital. You want to, because your mental capital is as crucial and precious as the capital in your trading account. So you want to basically pay attention to your emotion, have proper emotion control, and always be disciplined. If you're going to have bad days and good days in the financial market, that's a given. On bad days, you want to take your losses and move on. On good days, you want to look at things you did correctly and try to replicate that. So the first thing you have to do in taking care of yourself is to safeguard your mental capital. Number 2, seek a work-life balance. This is critical. Whether you are a day trader or your trading horizon is longer, you need to have a work-life balance, because trading is not a sprint, it is a marathon. And success doesn't come overnight. I don't care how smart you are, or how sophisticated you think you are, or how, whatever it is, how well surrounded you are. You want to seek a work-life balance. That means you want to spend time with family and friends. You want to allocate your time to interest and passions, things that are important to you. You want to understand that when it comes to trading success, it's all about time management, right? You want to have proper sleep. You want to be able to be comfortable with your trading. You want to chase emotions away, and most importantly, you want to control stress, and control stress during trading and after trading. When the markets are open and when they're closed, you want to be able to have the ability to control your stress. And the best way to do this is to diversify your interest. So spend time with your family. Spend time with friends. Do things that are, that are important to you. Go hiking, go surfing, go dancing, whatever it is. All right. Number 3, the third thing you need to do to take care of yourself is to seek constant mentorship and support. Now, if you're a rookie for a reason. You just entered the game. And there are players who've been playing the game for the last 20, 30 years. Seek their support. Seek their advice. Right? Now, trading by yourself can be challenging, and this can basically guarantee that you'll lose money, and it will even increase your learning curve, and nobody wants that. So what you want to do is you want to find a trading community in your area, or even a mentor or 2 or 3 mentors who will guide you. Now, luckily nowadays, if you have nobody in your area, you can go online, where you have a lot of trading platforms that provide this sort of mentorship and support, right? The thing here is that you don't want to reinvent the wheel. You don't want to make mistakes that others have made over the last 20 years, 30 years, 40 years. All you want to do is to learn. You want to learn from others' experience without suffering yourself. Okay? So the thing here is that, remember, it's not about your ego. It's about saving you money, because if you find the right mentor, you could save years of suffering and thousands, if not tens of thousands of dollars. All right? So take care of yourself. That's the first hack for fast profit. I'll be right back right after this for the second hack. The second hack. Welcome back, folks, to another edition of Sweetie Kiwi. We are going to delve right into our second hack for fast profits. Now, of course, these hacks are meant for rookie traders, but even experienced traders might be helped just by listening again, just by getting a more, a refreshener of those tips. All right. Now, if you just joined us and you like the show so far, you like the quality of our show, please consider subscribing to our channel and turn on the notification bell so you are made aware whenever we drop a new show. We drop this kind of shows on investing, finance, healthcare, relationships. Our topics are very diverse. All right. And share, like, and comment below. Let us know what you think. We want to quickly acknowledge those viewers and listeners who have been supporting us for the last few years, particularly Daryl Gregory in Millsville, Minnesota, Mel Johnson in Eden Prairie, Minnesota, and Aurora Dodson in Rochester, Minnesota. Thank you so much. So, second hack, do your homework. So, first hack was take care of yourself. Second hack, do your homework. The first thing is you want to manage risk properly. Now, the thing here is that you can't execute a perfect strategy, a perfect trading strategy without proper risk management, right? Why? Because all your plans, all your strategies will never be 100% winners. You will be losing money, right? The thing is, if you don't have proper risk management, you can have 99 winning trades, but one losing trade can destroy your portfolio, can actually wipe you away, can wipe it out. If you are over leveraged, if you don't have proper risk management strategies, you could go down, right? So risk management means you are sticking to your stop losses, you are sticking to your take profit, to your targets. And the thing is that on each trade, on each position that you enter, you only risking a small portion of your account. And experienced investors and Wall Street gurus talk about never lose more than 5% on a single position. And I believe this is a great statistic. This is a great percentage. So don't risk the entire portfolio on a single trade. All right. The second thing you need to know when it comes to doing your homework is you need to know the different time frames. Now, when I'm talking about time frames, this has two dimensions here. The first dimension is that you need to know when the markets are open. And this is very important, especially if you are trading on some what I would call exotic markets, such as Forex, foreign exchange, or options, futures, commodities, that kind of markets. You want to pay attention to when the Asian markets are open, when the European markets are open, when the American markets are open, right? So when Toronto is open, or when New York or Chicago are open, you want to know when the Nasdaq is open. You want to know. That's the first aspect of knowing the different time frames. The second aspect of it, you need to pay attention to the technical indicator, and you want to understand what a 5-minute chart is, a 5-day, or a 24-hour. So that would be like a daily, a monthly, a weekly, an hourly chart. You want to understand, and you want to pick the time frame that works for you. If you're a day trader, chances are you want to pay attention to the 30 minutes chart, the 1 hour chart, the 5-minute, the 15-minute chart, right? If you are a weekly trader, in other words, you trade once a week, you might want to pay attention to the 4-hour chart, for instance, or the 8-hour. Either way, it's up to you to determine what works for you. And again, this will come from your own homework, your own risk profile, but most importantly, also the support that you would have garnered from a mentor. Now, quickly, you want to see something here. This is not investment advice. We don't provide investment advice. This is just general information to kind of help you understand what's out there. Everybody's situation is different, so I would encourage you to seek the expertise of an investment expert if you're not one yourself, or you want to seek the expertise of a mentor. As I said earlier, it's always good to have somebody backing you up especially when you're new. The third thing you want to do when it comes to doing your homework is to pay attention to your setup. What I'm trying to say here is that you want to understand. By setup, I'm talking about the instruments you want to focus on. For instance, you can journal your trade. The instruments range from stocks to bonds to ETFs to currencies to options, and the list goes on. You can also specialize on a region. You can say, I'm only trading equities from Latin America. I'm trading equities from Argentina and Brazil, or European equities, or Asian commodities. Whatever it is, whatever works for you. But you have to pay attention to those are the setup. All right. You also want to pay attention, and the thing here is that the idea here is that once you pay attention to them, you're able to journal your trades. You can start seeing what works and what doesn't. So this is how you improve in the long run, by being able to analyze your trades constantly and making tweaks. All right. I will be right back right after this. Don't go anywhere. Welcome back, folks, to another edition of Sweetie Kiwi. We're still continuing our conversation about 3 hacks for fast profits, especially when you're a rookie trader. Now, here is the third hack. I already gave you 2 hacks. The third hack, before I give you the third hack, let me take the opportunity to recognize 3 of our beautiful and lovely listeners and viewers and fans throughout the world, especially in North America. I recognize today Roberto McDowell in Singac, that's New Jersey. Tanner Stanley in Newark, beautiful state of New Jersey. And Kina Church in Jersey City, again, that's in New Jersey, the Garden State. Thank you so much. Hack number 3, craft a trade plan and execute it. Now, under the umbrella of crafting a trade plan and executing it, let me just give you the 3 things you need to do. 1, you want to craft a trading plan. Now, what I'm talking here is that you want to have a way you need to understand what price you are going to enter in, your stop loss, your profit target, all of those things. You need to know them before you even enter a trade. You need to limit the kind of loss you're having. This is important. You need to specify which market you will trade, when you will trade, what you will do after that. So once you place a trade, are you going to be scotched to your are you going to be glued to your computer and just looking at the ticker just move, or are you going to close everything, go chill, relax, and just have a bottle of have a glass of wine. A bottle of wine would be too much. Have a bottle of wine. Have a glass of wine. So you need to have a plan, a trading plan when it comes to your trade, right? You need to identify things beforehand. The second thing you need to do is you need to use basic technical indicators. Now, technical indicators are used to predict future price movements, right? I'm talking about things like the money flow index, stochastics, MACD, Bollinger Bands, relative strength index. Those are good, but it's just better when you start to use basic. Basic means simple, and simple is always good in the long run. One example of a simple technical indicator is the moving average, right? This allows you to determine the stock's trend or a bounce trend, whatever it is, right? And you want to be able to use the moving average. You want to use, again, you can customize them, but people talk about the 8, the 15, and the 50. Sometimes people want to have the 9, the 20, and the 45. Doesn't really matter. What matters here is that using the moving average, you want to combine the short-term moving average with the long-term moving average so that you're able to see the overall trend in the market. And the good thing is that it's pretty simple to use. Whereas, technical indicators such as stochastics or money flow index require some kind of expertise, some kind of background before using them, right? So that's not always interesting for a rookie trader. The third thing you want to do when it comes to crafting a trade plan and executing it is to set entry and exit parameters. Now, as I said earlier, it's always important to have the proper risk management strategy, and part of that strategy is to have a TP and SL, so take profit and stop loss. All right, you want to be able to identify your risk reward ratio. You want to know, how much you're willing to risk. We talked earlier about, I gave you a percentage, like 5%. Never risk more than 5% of your portfolio, or 2% or 3%, depending on your risk profile, on a single trade. So, you can have a risk reward ratio of, say, 5 to 20. So you're losing, if things go bad, you're losing 5% of your of your portfolio, of your capital, that is. And if things go right, you are making 20%. So that's the 5-20 risk reward ratio, and it's always good. Okay, so those are the three things you need to think about when it comes to crafting a trade plan and executing it. Don't go anywhere. I'll be right back right after this. Welcome back, folks, to another edition of Sweetie Kiwi. I hope you are doing marvelous, and I'm doing fantastic here. And I just want to quickly recap today's conversation. But before I do that, I just want to acknowledge the contribution and feedback of Callan Frankel and Marlborough in New Hampshire, Charlie Owens, Portsmouth, New Hampshire, and Elsa Owens in Londonderry, New Hampshire. Thank you so much for all our viewers and listeners. I really appreciate it. Now, here is a recap to today's conversation. Number 1, take care of yourself. You want to safeguard your mental capital. You want to seek a work-life balance, and you want to seek constant mentorship and support. Hack number 2, do your homework. Manage risk properly. Know the different time frames and pay attention to your main setups. Hack number 3, craft a trade plan and execute it. Craft a proper trading plan. Use basic technical indicators. Set entry and exit parameters. Right? Now, before I wrap this up, I just want to give you a few pro tips here. Now, one thing you have to understand is that when it comes to trading, knowledge is power. And you want to set aside time and funds. And don't worry about growth or profit. Start small and learn along the way. You want to time your trades. This is very important. And don't get emotional. Cut your losses with limit orders. Right? And the last thing that's very important is always be realistic about profits. This is not a sprint. This is a marathon. And profits take time. Be profitable, be smart, and be marvelous. I'll speak to you next time.